What is capital gain on mutual funds? The profit you generate when you sell or redeem your mutual fund units are referred to as capital gains on mutual funds. There are generally two types of capital gains decided by the period of holding: short-term capital gains, STCG, and long-term capital gains, LTCG. The tax applicable on these capital gains is referred to as capital gains tax. Short-term capital gains, STCG. If you sell any units in an equity mutual fund scheme within a year of purchase, your gain will be considered as a short-term capital gain. For anything other than equity funds, like debt, liquid, hedge, this is slightly different. The holding period needs to be less than 3 years for the gains to be considered as short-term capital gains. Long-term capital gains, LTCG. If you decide to wait it out for more than a year on any investments in an equity mutual fund scheme, the profits on your investment will be considered as long-term capital gains. Again, with debt funds, you'll need to hold on to them for more than 3 years for the gains to be considered as long-term capital gain. On equity funds, your short-term capital gains will attract a 15% capital gains tax. No tax was charged on long-term capital gains until January 31, 2018, but currently, long-term capital gains are taxed at 10%. You pay short-term capital gains tax on debt funds as per your current income tax rates, 10, 20 or 30%. Long-term capital gains, however, are taxed at 20% with indexation benefits. Indexation is a process used to adjust your original cost upwards by means of a government-issued index. This helps you adjust for inflation over the period you've held your capital assets, reducing your tax liability. Let's now also briefly look at what happened to dividends we gained from mutual funds. The dividend earned used to be completely tax-free until Budget 2018. This has been increased to 10% from April 1, 2018 in line with the long-term capital gains tax applied on equity mutual funds in the 2018-19 budget. Your dividend income from debt funds is also tax-free in your hands, but the mutual fund house has to pay tax before distributing the dividend to you. This tax is called Dividend Distribution Tax (DDT).
So thank you for watching the video. Do subscribe to the channel and press the bell icon to get notified on the latest videos. Bye for now and see you next time.